Panic sell has turned into panic buy in just a matter of hours. Tesla stock is advancing today at the time of recording this video about 3%. And we do have some pretty big news from Elon Musk, but we'll get into that in just a moment. Specifically for anyone that is now considering getting back into Tesla stock, perhaps if you missed the latest rally, Gary Black has a couple of different reasons why now could be a good time to own Tesla stock. He says, quote, "Here are the positive reasons investors should consider buying Tesla, down negative 10%. Number one, Elon reaffirmed that the more affordable $25,000 to $30,000 Tesla vehicle will start deliveries in the first half of 2025. This is classic TAM expansion fueled by leveraging a premium brand to lower price segments. TAM stands for total addressable market. For an example, if you sell a $100,000 Cybertruck, there's only so many people that can afford that. If you sell a $25,000 cyber car, there's a lot of people that can afford that. So you open up the potential consumer base, which opens up potential deliveries and all of the good things that go along with that. He goes on to say Elon was deliberately vague to prevent the Osborne effect on more expensive models. Elon Musk basically said on the earnings call, I don't want to give too much detail about these new models because they're so good, we could destroy our demand in the near term. Number two, the Robotaxi event on October 10th will instill confidence in investors that Tesla will be first to introduce generalized, unsupervised, full self-driving. Number three, Tesla's energy business continues to soar. Tesla's Q2 energy gross profit increased 200% versus Q2 of 2023. In Q2, energy was 16% of Tesla's gross profit versus 11% in Q1. Number four, we expect at least one other OEM will give up on autonomy and instead license Tesla's FSD technology. Number five, while auto gross margins excluding regulatory credit hit new 36-month lows in Q2, the switch to 0 to 2% financing deals instead of further price cuts is positive. The loan rate buydowns can be reversed anytime and doesn't hurt residual values, doesn't train consumers to wait for more deals. Number six, auto gross margins still being negatively impacted by Cybertruck ramp. By 2025, when Cybertruck is delivering 25,000 trucks a quarter versus 11,000 in Q2, Tesla's Cybertruck should be able to turn a profit. Number seven, China's Q3 sales are off to their best start in 5 quarters as Tesla China extended its 0% financing promotion. And number eight, once the Fed starts cutting rates, 100% odds implied for September, long duration, high PE stocks should respond the most, assuming we're not heading into recession. Elon Musk says today it looks like the public is in favor of Tesla investing in XAI, potentially about $5 billion. Some other Wall Street guys like Deepwater Asset Management's Gene Munster, someone you're familiar with if you watch his channel, he suggests Tesla shouldn't invest $5 billion. They should invest $20 billion into XAI because the return on investment over the next 5 years could be as high as 600%. With that said, about 68% of users polled on X say that Tesla should invest in XAI. And Elon Musk will discuss this with the Tesla board and presumably at some point down the line could be up for a vote. This specifically is big because I think it does two distinct things for Tesla. Number one, it solidifies Tesla as this AI company instead of just an auto company. If you're unfamiliar by now, that's the only way to really look at Tesla. And number two, it to some degree turns Tesla into the early stages of a holding company. Now, Tesla, with all the divisions Tesla has now, it's already, in my opinion, a holding company. You have the auto business, you have the FSD/AI business, you have the services business, you have the energy business, the solar business, and now you could be branching off into other investment-like businesses. And I think it was pretty phenomenal to see today. All of your other big tech names were deep in the red when you started trading, and Tesla's stock was massively outperforming, really grouped in the small cap or interest rate sensitive sector of our markets. Now, I do think this is a trend that is going to continue. Tesla earnings, the lack of hype that was associated with them, definitely put a little bit of a speed bump in front of us, and that's what we seen yesterday with Tesla stock falling about 11%. But the trend is still the same. As I said yesterday, nothing changed for Tesla. In fact, if you're a long-term investor, I actually got more bullish on Tesla following Tesla's earnings just a couple of days ago. With that said, there is another big driver today that is helping Tesla stock and specifically your small caps to outperform. I should mention the Russell 2000 is up 1.9% today. The NASDAQ is up 0.18%. The S&P is up 0.43%. And the Dow Jones Industrial Average is up 0.71%. So what areas are outperforming today? Well, the cyclical areas, which is seen as the Dow. Cyclical means if you're a Dow company and the economy goes into a recession, you're more than likely going to be affected from that. You're cyclical to the economy. You follow the economic wave. If the economy is better, then these companies are going to do better. Dow is a lot of cyclical companies. The Russell 2000 is a lot of cyclical companies as well, but also attached to interest rates and Fed policy. So you are seeing cyclicals outperform today, a sign the economy is not as weak as we thought. We'll get into the data here in just a second. And you have interest rate sensitives and cyclicals outperforming, which is the Russell 2000. The reason for this today is your GDP growth rate quarter over quarter came in much better than expected at 2.8%. We were expecting a number of about 2%. Now, I know what a lot of you guys are going to say. Today's GDP number was heavily influenced by a buildup in inventory. And that's correct. You are 100% correct. But Wall Street doesn't give a rat's ass where the GDP comes from. It came in at 2.8%. Even if it's revised down by 50%, you're still going to come in at 1.4% GDP, which was last quarter's GDP. This just reaffirms to Wall Street, soft landing. As I've mentioned countless times here on this channel, like 50 or 100 times by now, the only thing that really matters to Tesla stock in terms of a big downside move, like the only thing that's really going to get Tesla to fall 50% from here, minus any exogenous event, an asteroid hitting, Giga Berlin or Shanghai or Texas or something crazy, is a recession. Is the economy taking a steep downward dive? And based on this GDP report today, again, even if a lot of it was from inventories, Wall Street doesn't care. This is good news for Tesla. Now, what's also fascinating is you had durable goods orders month over month for the month of June that came in at negative 6.6%. That was a massive miss. We were expecting positive 0.3% coming off of last month's 0.1% number. Now, this happens from time to time. This happened in January of 2024. This happened in October of 2023. During this period in time, you were actually coming off of a 4% positive month in September. So this was a big downward surprise. But again, when you're comparing durable goods orders to GDP, Wall Street doesn't care about durable goods orders as much as GDP. But it is a sign that the economy is continuing to weaken. Yes, it is continuing to weaken and really validates the Fed cutting rates. So with the data today, you got validation that rate cuts are coming soon, like with 100% certainty, as Gary Black said in the post we read earlier in this video. And you got 2.8% GDP. I mean, from a Wall Street's perspective or algorithmic perspective, what is there not to like about today? Now, Alex on X says, I can't believe some people don't believe in FSD. Elon Musk responds and says, most people have no idea it exists. And that's very true. I know if you live in California or maybe parts of Florida or Texas, you're like, how in the world could everyone not know about full self-driving or cars that can drive themselves to some capacity? I'll tell you right now, this is 100% accurate for where I live in Michigan. Nobody has any idea that that kind of technology exists literally anywhere. People are not as smart as you think. And I'm not just referring to the general population, I'm also referring to Wall Street. A lot of Wall Street guys have no idea the implications of cars that can drive themselves. Clearly represented in the still about 35-40% decline from all-time highs Tesla stock is currently experiencing. Which I do also think, from my perspective, Elon Musk is able to say this, that most people have no idea that this exists, is very different from what you'll hear from maybe other CEOs or guys on Wall Street that just associate with Wall Street guys and other CEOs. Elon Musk actually understands the average citizen. And that's kind of strange for the world's wealthiest individual. You would think he's out of touch with the average person, and well, he's clearly not, because it's true. Most people have no idea full self-driving even exists. Maybe I should make a video just walking around asking people, what is Tesla's full self-driving or FSD? And nobody's gonna know. Like, we are so ahead of the curve here as far as FSD adoption, as far as full self-driving as a concept. It's not even on people's radar yet. By the time it is, Tesla stock is going to be substantially higher than where it is today, probably the most valuable company in the world. We are also getting some news that Cathie Wood just bought 33,000 shares of Tesla stock following yesterday's decline. Now, David Rosenberg, he is calling for a recession by the end of this year, 2025. Keep that in mind. But he does say and provide some clarity that I would like to share with you guys. The GDP growth of 2.8% came down to three sources: saving rate drawdown, the beloved government sector, and inventory building. Outside of these, the headline would have come in at a 0.6% stall speed pace. We shall see in Q3 the extent to which these three support mechanisms were permanent or temporary. So again, it's one of those things where the number itself looks a lot better than the reality, but Wall Street doesn't care. They just look at the number and everything else does not matter. So I do think in the near term, this changes the dynamic for markets at least a little bit, because there is no growth scare anywhere. Growth scares, recession scares, again, that is the kryptonite to Tesla. That is the kryptonite to small caps and to basically everything. That is the difference between a roaring market throughout the rest of this year and a market that looks like 2022. Elon Musk says we have yet to unlock the full potential of hardware 4 that may enable up to a further 8x increase in parameters. He also says there are still some issues with this release in regards to V12.5, but you can see the magic already. We're pushing it out only to those who have requested advanced releases, setting on screen that is defaulted off. For regular users, V12.5.3 is probably suitable for wide release. Jim Cramer last night had some very positive things to say about Tesla. I know there's this inverse Cramer effect. Retail investors, mainly, they like to short or sell stocks that Cramer endorses after he famously endorsed Bear Stearns like 2 weeks before they went bankrupt and the stock went basically to zero. But a good portion of Wall Street does respect Cramer. They do listen to what he thinks and what he says, and well, it could kind of endorse this let's own Tesla stock mentality from big money. This is a trend that you have seen start over the last couple of months, with a lot of this latest rally in Tesla not coming from retail investors, but coming from institutional investors, which is a lot different than anything we have seen in quite a while. The last time you had institutional investors that were actually bullish on Tesla, that wanted to own Tesla in mass, like you're seeing now, was back in 2021 and 2020.
Perhaps you have to buy this week just because of the future, which seems very bright. I actually think that it makes sense, at least as a place to start buying. What matters is that you have to wait. You have to be patient. You have to be long-term oriented. Trades that are in short supply on Wall Street. As I see it, the key risk with Tesla was that Musk might leave over his pay package. Now that he's staying, I recognize that he's just better than everyone else when it comes to envisioning the future. Perhaps with the sole exception of Jensen Huang from NVIDIA, who is also, by the way, a lot more fun to hang with. Still, Musk's bankable, and the rotation out of the Magnificent Seven could give you a chance to put his genius to work for your portfolio, and it's probably right here worth taking.
Again, I'm not necessarily saying this is positive for Tesla, because it just hasn't been in recent years. When Cramer says to buy a stock or endorses a stock, it doesn't tend to do well in the near term. But Maybe, perhaps this time's different. After all, Tesla's up 3% today. And we can see here in a new video from Zangler on X, the Tesla semi-factory has concrete progress. This was on July 24th, 2024, so yesterday. And he says the big news for today is literal concrete progress. Trucks are streaming into the site and footings are being poured. The next watershed event is the arrival of larger cranes to assemble columns, beams, and roof trusses. The South Pasadena Police Department on Tesla said this: Tesla was not only a viable option, but it was the best option. We got a much better performing car that cost significantly less to maintain. Our admin fleet in the first year had absolutely no maintenance. Elon Musk says Tesla will release ASS, actually Smart Summon, next month. It's been coming soon for a long time, so we'll see what happens. Tesla has reintroduced the referral program award that allows you to accelerate your Cybertruck delivery for 30,000 credits. Tesla's Megapack official X account says a 415 megawatt hour, 1,660 megawatt hours of Megapacks will be installed at Acacia Energy Orion site, one of the largest storage projects in the national energy market. This contract looks to be about $650 million. Ford's EV unit reported Q2 revenue of $1.1 billion and a loss of $1.1 billion, with EV vehicle volume down 23%, EV revenue down 37%, and EV EBITDA margin of negative 99.5%. Co-founder and former CEO of Cruise says, quote, GM repeatedly finds themselves with a 5 to 10 year head start, but then fumbles the ball, shuts things down, and loses the lead. Anyone remember the EV1? And it's being reported that Elon Musk is on Capitol Hill, or at least was yesterday, and he just walked into the house. He wouldn't say why he's there. Rivian will go on to trial over allegations that it encouraged its employees who defected from Tesla to steal trade secrets, according to a tentative ruling issued by a California judge. Tesla is offering 3 years of free supercharging benefits when purchasing a Model S or X vehicle in Taiwan. The promotion will be effective from July 31st to September 30th, 2024. And Tesla is offering a temporary minimum interest rate of 2.13% on Model 3 and Model Y vehicles in Taiwan. The vehicles must be delivered within the third quarter. And according to Justin Sawyers of the Austin Business Journal, Tesla has leased a 183,000 square foot building that is being built by McAllister Assets in the RCR Taylor, Texas logistics rail yard. And Tesla's Model Y is officially the top selling NEV in Beijing, Shanghai, and Shenzhen, China in the first half of the year. Google Trends data for the Tesla lineup is showing some pretty sharp acceleration, specifically for the Cybertruck going from 64 to 76, the Model Y going from 25 to 28, the Model 3 staying at 24, the Model S going from 10 to 11, and the Model X staying at 9. Google Trends data for full self-driving is coming in at 21 today, which is an uptick from last week's number of 18. And sentiment over on StockTwits for Tesla is coming in today neutral at 52. Yesterday, it was extremely bearish at 21. So retail seems a little bit more excited about Tesla today than they were yesterday. Message volume today is high at 57. Yesterday, it was extremely high at 85. And participation ratio today is normal at 54. Tesla continues to run about 4,000 different ads with Google. Global inventory numbers for Tesla's Model Y at about 6,100, the Model 3 at 4,900, the Model X at 3,200, and the Model S at about 2,700. All healthy levels overall. Option activity from big money today via the interesting flow sentiment is showing 11 different trades totaling $2.68 million with a positive order value of 84%. Tesla's short interest of free flow is falling a little bit today from 3.79% down to 3.77%. You also have $22.55 billion currently sold short in Tesla, which is down from about $25 billion just a couple of days ago. That's because yesterday's big drop, and you do only now have 104.41 million shares that are sold short compared to about 105.4 4 million shares that were sold short just yesterday. So it looks like about 1 million shares potentially took this opportunity, this drop in Tesla, to cover on those short positions, which actually is a good sign going ahead, because if shorts were really super bearish on Tesla and they thought Tesla was going to continue to fall, you would have likely seen more shorting activity, not shorts covering on the first sign of weakness. The percent of stocks currently trading above their 50-day moving average today is up about 4%. So 4% of stocks are now trading above their 50-day moving average today, in which they were not yesterday. That brings your total number up to 65.5% of stocks above that 50-day moving average. And we do have a new AI investor sentiment survey that just came out today. 43.2% of investors are bullish. That's down about 9% from last Thursday's survey. 25.1% are neutral. That is up almost 2% from last week's survey, and bearish investors are now at 31.7%, which is up almost 8% from last week's survey. Tesla stock on a technical basis, it looks like is holding support at these longer term downtrending lines. That's a very positive sign. This is what I was talking about heading into Tesla earnings. If you're really bullish on Tesla, these levels are the only thing that really matters, and it looks like you're holding those as support. Now, on a potential bounce, you could go back to that 20-day moving average, which is around $239 per share. I would not be surprised if we get a bounce to that magnitude. In fact, I'm almost expecting that, considering the GDP numbers came in so good. We do have PCE coming tomorrow morning. As long as that's not a big big upside surprise, I should say, you're probably going to see these interest rate sensitive names, continue to outperform, and that does include Tesla. Now, if you take a look at the RSI is basically neutral at 48.26. So definitely some room to make that upside run there. And the MACD line has been falling sharply. Could be due for a little bit of a bounce. MACD line is at 9.56. Signal line at 14.61. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day. Join the trading community if you would like to come trade with us as well. I should mention that. But the most important thing is you guys enjoy your day, and I will see you in the next one.